Are you a U.S. citizen living outside the U.S. or maybe thinking about moving outside the U.S., but you don't want to pay a ton of money for your U.S. tax return preparation? You're used to filing taxes on your own, like through TurboTax, or you do it yourself some other way. But going outside the U.S., you know, is going to boost your tax prep fees. If you go hire a specialist, somebody like me, to file your tax returns, it's going to cost a little bit more. There are some lower cost options out there for tax preparation services. For example, as technology starts getting better and better, there's some DIY options out there like TurboTax that actually does the filing for you. TurboTax actually does not have a full DIY option, neither does H&R Block. They have an organizer type situation where you input your information and they do connect you with an actual tax preparer to get your stuff done. But there are some real DIY options. So today we're going to be looking at ExpatFile. And just as a disclaimer, I don't have any connection to ExpatFile. You know, I'm not specifically looking to make it look bad or good. I'm just going to go through it as if I were an expat and point out some things as I go through that I think the software may do good, that I may think the software does bad. And I'm going to have a little bit better insight, obviously, because I do a lot of these types of returns personally for people. And so I'm going to see what are some important things maybe they're skipping over or taking for granted. What are the risks? What should you be aware of as a filer if you're using a service like this that maybe you wouldn't think of on your own as you go through it? The penalties for missing that can be $10,000 at a minimum. What if you had foreign corporations? It never mentioned any of that in here. What if you had been claiming the foreign earned income exclusion in the past? Why are they recommending this? The rules state that you have to attach it to your tax return. So it doesn't give you the option to attach it. So let's jump in. So this is ExpatFile. It offers a full DIY service. So you fill out the information in the system and you can file straight through their system. The standard package is $119 and it's specifically for expats. I mean, the first question you get here is, do you live outside the US at any time during the year? So let's go through the process. So yes, did you live outside at any time during the year? Same question, not sure what happened there. Have you read through our terms and agreement? So, you know, the general terms and agreement, we're not going to read through this entire thing, but of course it's going to put that responsibility, you know, the responsibility of the user on you, right? And probably like it should, it's not going to be able to give you every nuance of the tax law for every question. That responsibility is going to be on you to make sure you're answering the questions correctly. So that's what it's going to go through there. Step one, let's get to know each other. So this is going to be probably our page one of the tax return, right? It wants to know our name. So let's just put in a name here. Date of birth. So let's say May. How do I change the date? You know, let's just pick a date here. May 3rd, 1989. All right. Occupation, let's say consultant. SSN, let's just make up a number. All right, and what address? We'll just use this random street. I'm in Mobile, Alabama, so it picked a random street near me. Can you be claimed as a dependent on anyone else's tax return? So it gives you a little information as to why that matters. You know, it can affect your personal tax situation. So that's nice. We'll say no. Are you legally blind? It gives you a little information on that. Basically can boost your standard deduction if you are. We'll say no. Then it's going to ask about your filing status. This obviously is one of those types of questions that not everybody knows the IRS tax rules for filing statuses. So especially if you live outside the US, maybe you're married to a non-resident, you need to know what filing status makes sense for you. And especially with a non-resident situation, you might not know. So let's see what they tell us about that. Okay, so they give us each heading and a sentence or two about each thing. So married filing separately, looks like they actually point this out. Many Americans abroad are married to a non-US spouse. Even if you have no children and are married to a non-US spouse at the end of the year, then this filing status is best for you. So that's a great insight. You know, if you're married to a non-US person, you're probably going to file as married filing separate. What it leaves out is maybe it makes sense for you to elect to file jointly. And there's options for that. I do that a lot for clients. If, say, the other spouse, the non-resident spouse, isn't working, it can make sense and you can save a lot of money for filing taxes because your tax rate can get cut in half if you file jointly. So that's an option that it doesn't really mention here. And then also there's a head of household option. So it does say if you have no children and are married to a non-US spouse. So if you do have children and are married to a non-US spouse, you may qualify for the head of household status. It caveats that a little bit without telling you why it's caveating that. So you're kind of missing a potential opportunity there too, if you could file under the head of household, which could cut your tax rate significantly as well. So it gives you a little information to make sure you're not doing something wrong, but you're missing out on potential tax benefits unless you knew to look up those things that I just mentioned. So let's just say single to make things simple. Step 2, add income. These are our most common income items that they mention. That looks good. Let's see less common. Rental, royalty, other, unemployment. All right, so they have like your basic income items. So let's say we're self-employed. Most of my clients are, let's say a typical expat is either going to work for a foreign company, maybe they're just remote working for a US company, but let's say we're self-employed, add a little more complexity to this. See, they changed it to $159 from $119, so it adds $50 to my tax return for being self-employed because they add the Schedule C. So that's what a lot of these things are doing, is they're just kind of ticking that price up as you add more complexity. Where did you live when you earned this income? Outside the US. So let's say we're in Australia. It's the name of this business. What's the principal activity? Business category. This is just picking off, so there's a Schedule C whenever you're self-employed. This is just going question by question at the top of the Schedule C. These are the exact questions that it asks. Let's say it's on the cash basis. So again, this is just question by question. If you look at the Schedule C, not really giving you any nuance. It's just asking the question. Did you have to file Form 1099? And it's going to give you some information on who has to file that. So if you paid a consultant over $600 to a U.S. person or a U.S. LLC. So that's a pretty good definition to tell you whether you had it or not. If you filed it, you probably already know. So you're saying yes or no. Let's say in this case, no. All right, so then we're talking about income. So it's going to ask you for the currency and your gross receipts. So let's say I made $100,000. How much returns or allowances? Other income, 0. So this is just going through kind of line by line of the income statement on the Schedule C. So let's say I'm not an inventory business, I'm a consulting business. Did you use your vehicle? No. Current expenses for your business for the use of your home? We'll say no. But it probably walks you through the home office business deduction and entering expenses during 2024. Okay, so let's see what categories they have. All right, so these categories are the categories listed on the Schedule C. So that's pretty nice. You just add it and you have a drop-down box. So let's say I had advertising expense of, 12,000 Australian dollars. Let's say I also had expenses of, let's see. So they have other here. So if you don't fall into any of this, you can say other and ask a description. Let's say, subscriptions. All right, so that's our business. So that's pretty nice the way they have it laid out. It has the expenses laid out. But again, that's putting the onus on you, right? So maybe you have QuickBooks or you keep it in Excel. You're probably not going to have it categorized the same way that the Schedule C does. So you're going to have to go into your accounting system and categorize it based on the Schedule C to get it into the system. Whereas most accountants are either doing the bookkeeping for you, or you can give them bank statements or your version of the Excel, and they're going to take care of that part of it for you. So it's, it's creating some work for you here, especially in the Schedule C self-employment scenario. Since you were self-employed in Australia, you may have a certificate of coverage if you're paying into the local Social Security system. What's the certificate of coverage? The certificate of coverage is what you need for a totalization agreement with the US and Australia, which basically allows you to not pay social taxes to both countries at the same time. In order to exempt yourself from US Social Security tax, you have to show with a certificate of coverage that you're covered under the Australian system. So this is pretty nice. So it asks you if you have one, and technically the tax return, the rules state that you have to attach it to your tax return. So it doesn't give you the option to attach it. But yeah, so this gives you, it applied the totalization agreement, so you have 0 self-employment tax, and it picked up the taxable income. So it did the basic math there of coming up with your net income. All right, so that's the summary. So let's look at step 3. So now we have, did you pay a non-US government any taxes during 2024? So again, we're in Australia. So one thing to keep in mind is Australian government and tax system runs on a fiscal year ending June 30, whereas our tax return is based on a calendar year. So you have to be real careful here. I mean, we say yes, but I assume it's going to ask us what is the amount of the tax, because it's not going to know, so we're going to have to tell it. So right, it asks us what's the tax amount in Australia. So you can't just take your Australian tax return and plug it into here, because that's going to be based on a fiscal year. So you're going to have to do some math on your end to figure out how to do that. And the rules can be kind of complicated for how to do that correctly. So that's not going to go into that nuance. But let's just say you paid $15,000 of Australian dollar taxes. That's all. Do you have any more taxes to add? Nope. This is our foreign taxes paid. And the other thing I didn't mention is it's assuming that you know what taxes are creditable and what are not. Because there's a lot of different types of taxes. Just like in the US, we have income taxes, social taxes, sales taxes. Australia has the same thing. They have VAT, they have provincial taxes, they have all different types of taxes, but there's only certain taxes that you can take a credit for. So it doesn't really go into that nuance. It just assumes that you know what taxes are creditable and what are not. So be careful of that, because there could be a risk, right? If you're taking too much, that could be an IRS risk that you could have to pay penalties on and pay that taxes back later. Or if you're not taking enough, you're missing out on an opportunity. All right, so special tax breaks. Let's see what we got for special tax breaks. All right, so there, Expat recommends claiming the foreign tax credit. Why are they recommending this? You paid enough non-US taxes to claim a foreign tax credit that would offset the taxes on your non-US income. Expat always recommends the foreign tax credit where it's available. So that's interesting, right? So it gives you the option to choose between the foreign tax credit and the foreign earned income exclusion, but it's saying it always recommends the foreign tax credit. As a general rule, I agree with that. I do too. The foreign earned income exclusion has some more limitations built into it than foreign tax credit does, and it's a little more complicated. It's an additional form. But one thing it's leaving out that's very important is, what if you had been claiming the foreign earned income exclusion in the past? If you suddenly stop, you've now been barred. That's a deemed revocation of the foreign earned income exclusion, and now you're barred from taking that exclusion for the next 5 years. So let's say you move to Costa Rica next year, or the Cayman Islands, where you don't pay any local income taxes. You're stuck with paying US taxes because you can't claim the foreign earned income exclusion because you revoked it this year unknowingly. So that's one of the big risks here of any DIY scenario, is that you have to know the implications of taking that foreign tax credit in this scenario, because they're recommending it to you, but they're not really giving you the full nuanced definition or explanation of what that means. All right, so we're getting started with your return. Are you a citizen? Yes. So now it's just going through the questions on the Form 2555. Did you take any trips to the US? So remember, the rule with the foreign earned income exclusion is the physical presence test is the simpler test, but you can only spend 35 days in the US over a 365-day period. Whereas the bona fide residence test doesn't have a day count, but you do have to be a bona fide resident for a full calendar year. And that is a nuanced definition, because just because you're there for the full calendar year doesn't mean you had a tax home there, and it doesn't necessarily mean you had an abode there, which means, generally your ties are closer to that foreign country than they are back to the US. A lot of that nuance I'm figuring out on the front end with clients. We're trying to build up support and documentation for meeting those tests on the front end before you actually start claiming the exclusion. But let's see what happens here. So let's say we did take a trip, and let's make it more than 35 days so that we don't meet the physical presence test. You qualify for the bona fide residence test. So it just automatically qualifies you for the bona fide residence test because you were there for a full calendar year. It doesn't get into that nuance. So it's very likely, I guess it leaves that risk open. If you're taking $100 and something thousand exclusion in a year that you're not technically eligible for because you don't have an abode outside the US, then you would have to pay that tax back with penalties. So that's a pretty big risk without providing any real support for your qualification under this test. other than you were outside the US during that time. All right, so then it asks about tax home. Did you have a tax home outside the US? So it does provide us a little definition here of what the tax home is. You know, if you read through this, it's not a bad definition, but again, if it's not something you're familiar with, this really isn't going to help you in determining if you have a tax home outside the US. So, you know, be a little careful there, I guess. What does tax home mean? Oh, was your tax home in Australia? So it's just going to have the same definition. We'll say yes. Have you ever claimed it before? Yes. We'll say last year. So it's just going through question by question now. That was easy. You qualify for the foreign earned income exclusion. Does your employer self, so do you have a non-US address? We'll just say no. What describes your main residence? Rented house. Does your family live with you? So this is just going through the questions listed on the 2555. Did you have a home in the US during 2024? So this is a question on the form, but one of the primary considerations of whether you have an abode outside the US, meaning do you have a permanent place available to you in the US? So let's just say yes to see if it digs into that question a little bit. Was it rented out to anyone? That's a question on the form. Let's say no. Was your US occupied by friends or family at all? So let's say no. So it's just available to me whenever I want it. Is this address of your US home? What are your employment conditions? That's a weird question because I'm self-employed, so I wouldn't have employment conditions for myself. So let's just say not applicable. What type of visa do you have? Let's say tourist. And again, this is just going through question by question on the form 2555. Does it limit your allowable stay in the country? Let's just say yes. Okay, so it doesn't really ask any more questions or dig into that. It just wanted you to fill out those sections so that it could complete the form 2555. So we have the foreign earned income exclusion. So that's basically it. Capture any payments made to the IRS. So this is going to be talking about estimated tax payments, extension tax payments. So summary is 0. We'll say none. All right, step 6. Let's check if you have any reporting obligations under FBAR or FATCA for 2024. So they collect information, the highest balances. So let's see how they collect this information. So again, the foreign bank account report, it's required if you have balances in aggregate over $10,000 in foreign financial accounts. The FATCA, the Form 8938, is a separate filing that has a higher threshold. What was the balance? So how do I determine this? So using account statements. By the way, if you aren't sure, then it's safe to click yes. So yeah, I guess they're building in that nuance that it's not always that simple to understand, what is the value of an account? What if you have something tricky like a defined benefit plan or something like that where the value is not so obvious? So they're just saying, just click yes if you're not sure, just so that takes out some of the potential penalties. So we'll say yes and see what happens next. All right, do you want to use Expat to file your FBAR? So to do the FBAR, that's another $59. We've already gone to Premier though, so it doesn't add another $59. So that's nice. So we already went to the Premier filing, which was included with the Schedule C. So that already includes FBAR filing with it. So it doesn't add another $59 on top of that. So this is just going to go through the different categories of filing your FBAR. So I don't think we need to go through those one by one. So then once you get all your information in here, review and pay, and then it's going to let you file the return right through here. And then you're done. Once you fill out all the information, you can file it right here, pay right here, and you're done. Filing's done. So, I would say overall, it's a very simple process, obviously. It's cheap, $159 for a Schedule C and for an FBAR, and gets you filed. But, the big risks, obviously, are that if you don't know what you don't know, there's no way you can be confident that this was done correctly. And even on top of that, you're not getting really a printout of the return before you file it. So there's no way to give this to somebody to review or really review it all yourself on the front end. So that's a little bit of a concern for me. But I would say another thing that pops out is if you're living abroad, there's a good chance you've invested abroad. Say what if one of these investments was a foreign financial institution, you had mutual funds. There's additional filing requirements for that with PFIX. What if you've invested in one of these pensions is a foreign trust? There's a 3520 requirement. The penalties for missing that can be 10% of the asset value, $10,000 at a minimum. What if you had foreign corporations? It never mentioned any of that in here. So if you live abroad and have a self-employed business, there's a good chance you set up the foreign version of an LLC, which is going to have its own filing requirement, its own complexity. So a lot was skipped over there, and there's a lot of penalties that could be uncovered with some very simple questions. So I would say from a nuance perspective, this is a very dangerous route for you if you have, any complexity at all. And a lot of times you don't know that you have complexity unless you ask somebody that knows what that means. So I would say as a general rule, the only people this would be relevant for is somebody that has a very good understanding of the U.S. filing requirement and knows a lot of the things that I just mentioned. If I'm spitting out some of these things like foreign bank account reporting, foreign trust, if Form 3520, if this all is understandable to you and you know these rules, then I think it could make sense. Or if you've had your return done in prior years and you have something you can kind of follow from a professional and nothing's changed, then you may be able to get away with it. But otherwise, I think there's way too much risk of, accidentally missing something. And yeah, you just saved yourself a couple $100, but what did you cost yourself if there's a penalty of $10,000 or more? To me, technology is getting better, but this isn't worth it, in my opinion, unless you're very comfortable with filing your own taxes and you understand the nuances of these rules. That's my review of ExpatFile. It's a pretty good system, but it's not free. It costs money, and there's some pretty significant risks of doing something wrong, and you would never know you did anything wrong until the IRS sends you a notice saying you did, and it's going to be expensive to clean up. So I'll be reviewing some other programs, see how this stacks up against it. If you have questions about your tax filing scenario and maybe the DIY approach is not for you, reach out to me at mcgowantax.com. Happy to have a personal consultation with you to see what works for you and how we can save you taxes going forward.